Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market had a week of really big moves, but not that big of a net change relative. Monday was the worst day of the week as the trade war really heated up. China retaliated to Trump's 10% tariffs and on the $300 billion, and they devalued the yen. They let the yen move to a level below 7, which has not been at for a decade. And that really stirred things up in the market. Of course, China is trying to offset those 10% tariffs, and of course there's 25% tariffs on a whole bunch more of Chinese goods. And if they do let the yen weaken, well, that makes Chinese goods cheaper around the world. So it is an offset, and this becomes not only a trade war but a currency war as we move further and deeper into it. So it was a very panicky day on Monday as the markets moved sharply lower. Stock market down 3% on the day. The yield market, absolute panic. We had a 30-year bond that gained 3 full points on Monday, and the 10-year yields plunged. They went down below 1.6%. The recession bottom, that was with the S&P 500, down well under 1,000. The recession bottom was 1.35%. So the stock market has got to be stock market traders and investors have got to be looking at this and saying, what does this mean? Well, certainly I'm saying that when I see these yields that low. Tuesday looked similar as the U.S. named China a currency manipulator, and the S&P futures went sub minus 60 very quickly. And then they started to recover, and they recovered through the close. We had a lot of days this week that the market actually got buying, Tuesday, Wednesday, and Thursday during the day. And even here on Friday, they're coming off their depressed lows as the market turned south again. Thursday was the big up day of the week as S&Ps gained 50-plus points on the yuan stabilizing. Bulls, shorts, they just panicked on the upside. Here's another opportunity. The market comes down, we're going to buy them, push them up again, because everything is really okay. And with the Fed stimulating and central banks stimulating and the drug that's kept the market going up for 10 years still there, well, everything is fine. So they bought them big and bought them right through the close. It was relentless buying. And that was kind of a one-day wonder as the market turned south on Friday. It's just 1 week ago that the president said the talks are really going well with China. And then a day later, he turned around and put a 10% tariff on their last $300 billion in goods. Now he says, well, they could cancel the talk. He's fine with that, the talks that are coming up in September. And at the same time, early morning on Friday, Trump bans the government doing business with Chinese tech giant Huawei. That's been in the news a lot lately, and that, on top of some other news, sent the markets lower on Friday. Friday, there was turmoil in Italy. They have huge political issues, and their bonds cracked. Now, their bonds have been incredibly low. A country like Italy that's been in huge trouble, and their bond yields just exploded like 30 basis points. And that weaker yuan was also reflecting the fact that the Chinese inflation numbers came out extraordinarily weak also, and you have to really look at whether or not their numbers are real. I don't think they are. So stocks went south in a big way. Friday opened a little bit hesitantly, and then S&P sold off 40 points. Then the buyers came back in here at midday, and here as I'm doing this show, the S&P 500 is down about 25 points. So it's weak here at midday. Sellers came back in, and they certainly overdid it on Thursday with that big rally, and here on Friday moving down again. Overall, what we expected in the market was big volatility. The thrashing that we're seeing in the market is a lot like what happens at the top. The bulls don't want to give up. The market's overpriced, has come too far, and it starts to move in both directions in a big way. We think that nature of the market is likely to be continuing. With extraordinarily low interest rates, you really have to wonder what's ahead when the bond market is predicting something really negative. You have yields down at 1.6%. That's a recession. They're talking about a recession when they're pricing money at that rate, and that means things are likely going to slow down a lot. You have to watch my big picture analysis video that I did on Thursday when I talk about the U.S. market and U.S. equity markets. It's really very informative. I show a chart on there that shows you the relationship between the movement in yields and the movement in stocks, and it's not a pretty picture. There's a warning in there that really bears heeding. And I really want you to go watch that video. It's level 2 members, and you can become a level 2 member and watch that video and get our snapshot for just $14. Just write to Matt, M-A-T-T, at askSlim.com, and you're going to get all of that, all 400 of our videos. So you'll be able to watch that really exceptionally good video, and you will learn a lot from that. So the stock market, in our mind, has a lot of downside risk in the near term, and I'm going to talk about that more in the short-term view. While support has been established now in this move down around 2840 on the S&P 500, the pattern does suggest a lot of volatility and continued downside trending markets here for quite a number of weeks. Again, make sure you stay to the end of the show, and you'll be able to see that. Just don't be surprised that if in this period, while this movement is going on, that I think to the downside, if it overshoots on the downside below that 2840, I think it could get as low as 2700 by November time. So I think we're in for a corrective period time, and here the beginning of a top formation in the overall stock market, which doesn't preclude a better time into the beginning of next year. I think it's going to be an elongated topping period. The bulls not likely to give up, and they're going to keep living on these lower rates and Fed actions. But overall, I think that it's a much different market, a trader's market, and a market that if you give it room, don't act too quickly, and trade smaller, you're going to have a lot of opportunities here as traders. So I think the tone has changed. Somebody flipped the switch. It's no longer just a bull market. It's a volatile, swinging, tradable market, and you just have to be on it and catch some of those bigger swings, and you'll do really well. Talk about huge swings. We had them in the market this week, but the broad index is down less than 1% on the week on average. The bond market gains 3 points. It had a 5-point gain for the 30-year, and the yields plunging down about 15 basis points on the week. They were down 25 basis points on the week, so they're around 170. And the yield curve inverting even more. So we're inverted all the way from the 1 month to the 1 year to the 10 years. So the 10-year, 1 year, 10-year is now about 7 basis points inverted. And that all-important 2 to 10 is only about 7 basis points positive. So that's going to invert too. In my opinion, as the longer-term rates come down, unless the Fed does a surprise action. And I mentioned that in one of my other videos this week. I think the Fed's going to do that. I think they're going to step in and they're going to cut rates as a surprise, and that's going to catch everybody by surprise. Well, maybe except me, because I think that when they are this far behind the curve, they're going to have to do that. So bond market, just a huge week. Yields plunging to levels that reflect recession. I'm going to say that again. Gold soars $63. This happens while the dollar only is, barely moving on the week. Dollar was down about 0.7% on the week. Silver followed up about 70 cents on the week. Big gains there, and gold much stronger than we had anticipated it would be for the week, though moving up towards levels that we had expected on the intermediate and longer term. So just super action on gold. It's both a safety bid and also a bid based on the currency war that is essentially going on. We might see the dollar plunging later in the year, which is something that we had expected. So dollar down 0.7% on the year on interest rates being this week, and I think it's a very toppy dollar that we're looking at right now. Oil down $1.25 the week. $1.25 doesn't tell the story. It's down to about 54.35. It traded as low as 50.52. It was absolutely devastated, and you had this huge rebound, but I think that's temporary, and I think we're going to have a lot to show you as far as that goes later in the show also, as we're getting up to what I think is a stopping point for this rally in the oil markets. You're going to want to see that. Follow me on Twitter at askSlim, and follow me and become a subscriber on YouTube, where we post this show all of the time. And YouTube's a good place to put comments on there also if you go to the YouTube site, into our channel, and I hope you do that. That's it for the opening, and I'll be right back with some important stocks to show you. All right, we're going to look at the best of the week. We're going to look at 5 stocks that had big upside moves, and we're going to look at 5 stocks that had good downside moves. We're going to try to look at opportunities in here, as we always do, and we're going to illustrate cycle analysis, which is a very unique type of analysis that we do, which is the rhythm of the market, the heartbeat of the market. If you want to get the very basics of this, you can read the book that is essentially the Bible of cycle analysis. It's called Profit Magic of Stock Transaction Timing by J.M. Hurst. It went out of print in about 81, so you have to buy used copies, and it was written in 1970. And I read it in 75 and have been, my work has evolved out of that book. And I have a cycle workshop also, 20 video modules that you can sign up for and really learn this style of trade, of analysis, and a great way to have tremendous market feel. You've seen, and yeah, it goes wrong sometimes, of course. Every analysis does, and overall, I think it's just the best way to understand markets. Let's take a look at AMD, and this gives you an example in AMD of cycles that are, we call them out of phase. So there are 2 cycles in here, and you'll notice that a lot of times I have cycles on the bottom that have 2 or 3 cycles that fit within a dominant cycle. This one not. These cycles are out of phase. And you can see in here the low here, and the low here, and the low here, and the low here. It all lines up beautifully. We were focused in on the more dominant cycle right in here, which made this low here and this low here, and projecting to a low here in this buy zone area, which we had even lower than this. But you had this huge upside move in here. So either that low is in place, and that would be an early bottom off of this minor cycle, or it's going to dip one more time down there. And I have a lot of doubts about that it's going to give us the ability to buy in this zone. They came out with a new server chip, and it was immediately cheered, and Google and Twitter signed up and became new customers, and it's supposed to be very good for them, and we're going to look for it to get up to the 100% fib extension up near 38 over here in this move. That's not very far up. It's only about 2 3/4 more points. And anywhere in this white space over here, if it dips, I really think it would be a good opportunity to do something on the long side. So this is a very good looking stock. Notice the positive cycles moving on the upside. These are called positively configured cycles. That's what makes your uptrend that you see in here, moving up and moving up that 34-week moving average. So a good looking stock in AMD, and we're going to look for it to continue to give buying opportunities that pay off. Yelp is the next one. This one was a good upside mover, up about 8%, with AMD up 17%. You have to look down to about 8% stocks for the next ones. Yelp has this gain. Look at the unusual pattern in here. So this is a classic diamond. Now, when diamonds form, it's usually because, and when diamonds form at a low, it's because the cycle pattern right in here is calling for the completion of a correction. But the directional component, or the overall level of buying, is too strong for it to move down, like it does in every one of these final phases on the downside that you can see in here. Every one except this one. And what does that mean? Well, there's a lot of buying in here right now, and this is a powerful bottom. And it says to me that it's extremely likely that it's going to get up into this area between 41 and 44. So Yelp moves up. Their earnings really good. Their analysts have now been upgrading the stock, and I think it's a stock that has bottomed. And you could see it, built this base in here, then did the diamond, and now is moving up. And I think you're going to see higher prices in Yelp. The defense stocks had a really good week also. Northrop Grumman was the big gainer. This up 8% on the week as they have a new weapons system and got some big contracts. So it makes a 52-week high. You can see that gets above this old high over here, and that's right there, and breaks out above that. It's in really good shape. For those of you that follow our cycle analysis, this is considered a P3 stock. In other words, it's moving to a new high. It's in a positive intermediate cycle configuration, and it still has some time that it could rally. Now, you see the buy zone right in here. We have this projected to peak out over here in the next 2 or 3 weeks and then move down again. A lot of that is because I'm influenced in the analysis by a stock market that I think is going to give ground on the downside. So this actually could do better than our projection in here, but this certainly, if it followed it, would be a buy zone right in here in the support confluence. You can see negative cycle right in here. When you get a negative cycle and then the next rally fails at resistance and then breaks that low right there, that's really bearish. And you could see it really worked as the stock fell 70 points after that breakdown. Positively configured pattern right over here, and once it gets up above this level, it's really positive and has that good upside move. This stock, it's projected to earn $22.50 for the year next year. It's only a PE of 14. It's not like it's that excessively priced. The question is, will the government keep spending at the rate they do for defense, and will they keep supporting a ridiculous 640 bases around the world? Well, so far that's the attitude. So I think it's stupid, but in the meantime, it's feeding these defense stocks. Lockheed Martin up 5% on the week, also making a new high. CVS is a stock that's had some issues. Why? Because they bought Aetna and they had a hard time digesting that one. And you could see the cycle configurations as we show them to you. You build a base in here. It says that you're likely to move up, and you see when you get above this level here, it explodes up. You had multiple top patterns here, and this ends up being a cycle that points to the downside right there. That says the next one will fail in resistance and then move down, and when it breaks the support, it moves down sharply. This actually hit perfectly in a fib extension zone that we had put in there. And now you can see a base building again. And look at this week right there, moving to the upside. CVS up 6% on the week. Earnings beat. And I think they have finally digested Aetna. We have this projected moving up in here to about 63. Now, I get emails. You're talking about the market going down, but then you're talking about stocks going up. How can that happen? Well, it actually can happen, especially in a time period with a lot of volatility. And a stock like this might pull back, but not a lot, on days when the market goes down. It actually is up on today with the market down. And that's an opportunity, because when the market goes up, the stock will probably go up a greater percentage. So this is a very, very good looking base in here. This big candlestick right there that you can see is very positive, and that is a stock that I would say is going higher. And I think if it pulls back, you've got good opportunities. Last one in the top 5 that I want to show you on the upside is Lululemon. Lululemon up about 5% in the week on no news. It's just simply a rebound after it was starting to make this top pattern. It got into this lower support zone that you can see right over there. I think the stock is exceptionally high priced. It's had a very nice pattern going on. You can see this bullish cycle right here, and because it lasted so long, it's called a right hand translation in a bullish configuration, and it only pulls down to the 23. When that happens, it's very likely to make a new high. It gets into these fib extensions there and gives you a sell signal. That is a double star evening star right there, and now it's trying to rebound. I don't think it's going to continue. I think it's going to continue to fail, and will move down into this lower support or lower. Note the 34-week moving average coming up right here. I can see this stock moving down about, we'll call it $15 to $20 from where it is right now. I think for aggressive traders, this is a short. No news rebound of 5%, and I think the stock is very tradable for the downside. That is the best 5 for the week that I'm going to show you. Of course, there were lots more out there that had decent moves, but these are the ones I picked out that I thought were important to talk about. And right now I'm going to give you some stocks that are not so good. All right, for the worst stocks for the week, I've got 5 to show you. Oil, of course, had a really rough week early in the week and then rebounded. And the drilling stocks have been in a lot of trouble. They have been in downtrends, and the company's essentially just bleeding money. Transocean is one of those. RIG, this was the biggest loser in my stocks that I look at of 310, 320 stocks. That's RIG is Transocean. This stock made a beautiful double top, way up around $14.50, and now has plunged close to $4. Take a look here, and you can see the double top. Now, the importance of cycle analysis. Cycles that you can see right in here, and by the way, that blue dash line is the OIH, so that's the ETF. Cycles make the chart patterns. You can see this cycle right in here, low to low, and that was perfectly timed. Then what happened was that it rallied again, just like it was supposed to, right there, and it got up to the same high. So this cycle peak and this cycle peak were very similar. That's what makes double tops. When the directional component changes and it turns down and gets below this level right over here, then it confirms the top and it's bearish. And generally, the distance from here to here is the same thing as you fall as it did right here. And you can see that that is a negative cycle right in here. That says the next cycle will fail in the resistance zone. So we had a sell zone in here, and you could see what happened, and it failed. Another negatively configured cycle, and now another breakdown. Of course, you can't really be short a $4 stock, but it is the biggest downside loser and it's just in a lot of trouble. It's headed below 4. Neighbors also down 14% on the week. Diamond Offshore down 5% on the week. This points to lows out in November, late October or November. So if you think it's cheap and you want to buy it now, I would say I wouldn't do it. It looks to me like you'll get a better opportunity. You might buy it at 3.5. I mean, this is so sick. Next thing we're going to look at is Triple D. Now, talk about missed opportunity. The 3D printing area should be just a monster. But what is up with these stocks? I mean, Stratasys is much better than Triple D. But all of the medical uses, these companies should be doing unbelievably well, and this company is doing unbelievably poor. Earnings, well, they beat by a little bit. They were 0. They didn't lose any money. They didn't make any money, but the revenues were weak. And analysts are downgrading the stock again. Why are they downgrading again at this point? Well, they missed all of this as the stock was $23 and now it's $7. So we see this decline continuing in here for about another month. And then let's see if they can save themselves. Another out-of-phase cycle situation here, but they are nesting at this level right over here. And nesting usually is a point where you get a sell-off into a bottom. That's what they did right over here, you can see, and they had a sell-off into a bottom. So cycles not giving you any hope in here at the moment for any significant rebound. And I would say the stock looks pretty bad. The next one we're going to look at is Fluor. We looked at this last week. This stock really had a horrible earnings report, and it collapsed. You could see that massive week right over there. Again, it hit our sell zone. That's the swing high, swing low analysis that gives us that. We have a couple of videos on that. If you take our special, you'll be able to see that. Again, Matt, M-A-T-T, at askSlim.com, and you can get that special. And there's so much to learn in there, so I really encourage that. You can see in here that it's broken under this low, and it's done so basically on the left side of the peak time. What that says is that this is likely to continue to fall into October. So if somebody came in here with some bottom picking idea and pushed the stock up, well, it's likely to move down again. When you get a negative stock like this, I would expect it to keep falling, and it's been falling. 13% down this week after that horrible week last week. We're staying in the industrial category here and looking at Navistar NAV. And this stock also gives you a breakdown right in here. They're still in horrible shape. I mean, they're losing money. And after that huge failure of their EGR system, that exhaust gas recycling system that they had in those engines, they paid out massive $1 billion plus in costs and claims, and still more of those to go. And 9/5 is when their earnings are coming out, September 5th, and we would expect that it's not going to be much better. You can see the breakdown right in here. Interesting, you can see that this break came and the rally came. This is a positive cycle right in here. That would say the odds are better than 70% that it was going to get above that level. But it failed. It failed about halfway up in here. And we didn't have a sell zone in there. I don't look at this one that much. But then it gets underneath this cycle low or cycle trough area there of support and breaks down. And this calls for a decline into late September, beginning of October. You'll note how many stocks are in that category of looking like they've broken down and are going to decline into that period of October. That gives you some indication of what the condition of the market indexes are. So that is a look at Navistar. The last one we're going to look at is Win. I'm going to give you a little different look in this one. First of all, the stock also looked good in here. You see this kind of basing positive cycle. It ended up above where it began. There was a lower buy zone right in here that we had, and we expected it to move up, and it did. It moved up with Las Vegas Sands also. And the pattern really suggests that it might try to get to the high, but usually when it tests the 78.6 like it did here, it doesn't get to the high. But now look at this, and I think this is all about China syndrome. This is a pretty sizable break in here, and the sum of the evidence of what we're looking at in here is a pretty negative situation. Note this points for a decline out into October. It's almost breaking that support, and that says to me that this stock is going to be in trouble, and we're going to see lower prices, and I wouldn't be surprised to see it below 90 that you see right over there. What's the condition of this stock? Well, let me just show you on our simulator what the condition of the stock is. This is our new built system of logic that takes all of our analysis and puts it all into 3 different time frames and uses also our option bias indicator. Take a look here at the simulator, and I'm going to type in WYNN, W-Y-N-N, and you'll be able to see here as I do that we have a condition where the long term is neutral, the intermediate term is N2, which means that we have negative momentum in a cycle pattern that's negative. Short term is negative, that are proprietary indicators of the short term, and OBI, which gives you an N2 condition, which is negative but slightly oversold. What that throws off is a bearish condition. It means you will want to do something on the bearish side, and the technical evidence favors a short side bias over the next 3 to 6 weeks. So this is kind of a swing trader type look in here that you can see. So we look at 3 to 6 weeks because of the swing trader holding periods and because it fits right into the sweet spot of option traders. So a bearish stock based on what we have in here. And let's just take a look at what the simulator is while we're here. And I'm going to reset that, and you can see in here that what we give you is our direction, the symbol, the directional bias that we have on a particular stock based on the sum of the evidence, and then give you our outlook for the next 3 to 6 weeks. We give you our rankings for the long-term, intermediate-term, short-term, and our option bias indicator. Our level 4 members get the option bias indicator on their right for their thinkorswim platform. And then we have the charts that you can just click on and look at our weekly chart and daily chart. Now this is being updated a lot more often now, so that gives you a static chart, not a live chart, and gives you our analysis on there. You can also, when we put trade setups in, and we have one right now in Nike, you could see that showing right there, I'm not going to show you what the trade setup is, but I will. Let's take a little look in here at some of the maybe top 7 or 10 conditions here in some stocks, as long as we're in the best and worst for the week. I'm just going to click on intermediate right here. Let's take a look at the best stocks right in here. McDonald's, by the way, is fighting this condition of a market that has been declining, and we have it ranked as very bullish. You can see all the rankings in here, and it favors alongside bias. McDonald's made a new high today. Can you imagine that? Really following. You can see United, it's slightly bullish. The reason is because the intermediate pattern is still strong, even though everything else is neutral. Amgen right over here is slightly bullish right here. What's weighing on it is the longer term right there. It's giving you a sense that we're in a P1 is only intermediate, is a minor rising phase. What this says to me is that we're in an upward correction of a bearish overall condition. So it's slightly bullish for right now, the intermediate term, but overall not great. Pan American Silver, this one had monstrous upside move, and it kind of ran out of gas, so OBI only has it at neutral. That's slightly bullish. Starbucks, you can see in here, it's late in an upside move. When you see P1, if it's P1 green, it still has some upside. If it's P1 yellow, we believe it's topping. But the P3 OBI is what's keeping this bullish. And Twitter is similarly bullish. You can see almost the same pattern right in there as Twitter continues to be really strong. So that's like the top 7 in our in the simulator. Let's take a look at the worst ones right in here, and you'll get an idea. Energy, of course, collapsing, and you can see XLE is extremely bearish, and all of these readings are very bearish. So, and of course, it keeps moving to the downside. Boeing is very bearish, and you can see these really negative readings, and of course, they have real problems with their 737. It might be a long time before they get those things in the air again. Disney, now look look at this. Disney was a good stock, but then all of a sudden it had bad earnings, and it started to affect the option bias indicator, and it broke down below a level that made it negative on intermediate term. So it's because it's still strong long term, it's only slightly bearish right there. You can't take a big negative position in there under that condition. FCX breaking down like crazy. Copper so weak, really negative condition. Halliburton, one of those stocks that's in the driller category, extremely negative, moving lower. And Macy's, a stock that is extremely bearish and moving lower. Can you imagine you can have this on what are the 84 very best symbols that you could possibly trade? We're working on something for later on for investors that you'll be able to look at all the symbols that there are, and it'll be in an investment time frame. So down the road that's coming, and it'll be another version of the Slimulator that's going to be fantastic. So we're working on that. You can have the Slimulator. All you have to do is become a level 3 member, and you saw the incredible value of what this is. That's we're running a special right now because we want to get as many people as we can in here to really get a look at what this is. We ran it beta for a while. A lot of people jumped in here to become members, but you can become a level 3 member. We're going to give you essentially a 25% discount for 3 months, which is equivalent to a 33% discount on the monthly rate. All you have to do is write to Matt at askSlim.com, MATT at askSlim.com, and ask him for that special link. And you will be able to get the Slimulator. Level 3, you'll get everything that I just showed you in here with the trade setups that we put on, maybe 1 to 3 a week. And also you'll get our entire library of videos. You will get the snapshot, the stock index report snapshot, which gives you daily fantastic look at how you can catch the runs. In other words, where are the acceleration zones every day, or where are the support and resistance zones, so you can maximize your trading. And everything in level 1, the weekly Slimulator, the ETF report. It's so much, it's unbelievable. So please write to Matt at askSlim.com and for that special. I think you are going to really, really improve your trading success when you look at this fabulous content and tremendous amount of content. That's it. We're going to be right back, and I'm going to show you our short-term view for the coming week. All right, short-term view for the coming week. We look at daily charts. We want to be accountable to what we said the previous week, so then we have credibility. That's always the key to me. There's so many people out there that are analysts that say things and have no credibility, and I don't like that. So we don't do that. We just tell you what we said. We tell you how we did, and then we move on because we believe that we're going to be right about twice as often as we're wrong. That wasn't the case this last week. We were about 50% is what we're going to rate ourselves. Light crude, we said it would be a down week. We were basically correct on that, but it was lower than we thought. It was weaker than we thought. We thought it would go to 52.80, and it went down close to $50. So we're going to ding ourselves a little bit on that one. Gold, we looked for a small change for the week, but said upward bias still is what it looks like. We're dinging ourselves a lot on that because it blew out of the top of the range pretty significantly when we thought it would be more docile and give us a better buying opportunity down the road, but it moved up sharper than we expected. So we're only going to get a little bit of credit on that one. The dollar, we get good credit on that one. We thought it would be small down. It was maybe a little bit weaker than we thought. And as far as the bond market goes, we get partial credit on that one. Also, we thought it would go up, and we said it would lean positive on it, and it was stronger than we expected because we didn't expect that Monday stock market huge downside move and big upside move in the bond market. S&P 500, we barely get any credit on that one, just a little bit. We thought it would be an up week. Well, It's not. It's a slight down week in there, and it was down a lot more. We thought that it would try to rally and then fail. Well, it just opened up sharply on the downside, so we got that pattern wrong. We thought it would get up to about 29.57 or a little higher and then move down, and because it moved down so sharply on Monday, well, it couldn't get into that pattern at all. The momentum in there, we said, was weakening. It was. It did affect the market on the downside, certainly. And now the momentum in the stock market has gone from very strong to neutral to weak. As far as momentum goes. Let's jump into light crude. We're going to look at what we think what's going to happen in the next week in these 5 markets. So here's your light crude pattern in here. It's rebounding. You can see that. Now, this note for our users that we shortened the cycles today by 2 bars. They were shortening, so we're going to go with the shortening cycles. Clearly, this is the rising phase of a new cycle. You can see that in there. Now, a lot about analyzing markets based on cycle analysis is observational. You have to be able to look at them and say, okay, what's happening? Where are we relative to phasing here? And we're in a rising phase. You can see that. However, we're in a downtrend, and you can see that. And on the intermediate patterns, it's in a downtrend. We have negative momentum, as you can see right in here. It turned negative here, and that certainly worked. It hit this sell zone and cracked. It's now back up into the sell zone right now. So what we think is that it's going to get maybe as high as 55, 65 up here and then turn down. We're going to look for a downside week in here and probably out a few weeks from now testing those lows near $50. So momentum negative, the pattern showing us that it's into the sell zone, and we think that it is going to be moving lower for the next week. We're going to look at the gold market, which just soared and did much better than we had expected. You know, I have to speak to the momentum conditions, of course, and here's where the momentum turned positive right over here, right around 1330. Of course, it's been in positive momentum based on the slim ribbon and following it up, as often happens, and moving up some $190 from the point it turned positive. You can also see the minor cycle patterns that are right in here. This minor cycle rising right in here, and we believe it's going to be flattening out and peaking. The reason is because this low, this nested area right over here in early September aligns with a low that's expected on the intermediate patterns. That says that this is likely to give us a choppier, flatter period and then some decline. What I'm looking for, and because I don't have the gold position I had when this started, is that it pulls back and gives me an entry. Now, the entry area is right over here near 1465, 1470 right there, and we think that's going to come in early September. So that opportunity is likely to bring you a huge up move after that. So we're going to look for gold to give us a small down week in here, just trying to roll over. Momentum still very strong. It's going to keep it from giving up much ground. And that's our target, 1465, 1475, come into early part of September. Take a look now at the dollar, DXY. So you had a little bit of an early low right over here, which said to me that it was likely that it would move down again. You see the momentum in here is positive right there. It's in an uptrend, a positive cycle, positive cycle. I'm giving this, because it's down to the 78.6 here, the likelihood of failing in this area. So we're going to look for maybe a down Monday or Tuesday and then moving up. That's kind of the pattern that we have drawn on our notes in here, kind of little down and then moving up again. We'll call it a small up week. Momentum is weakening. It's almost neutral right over here, so it's likely to not give a lot of support to this market. We're going to look for an upside move to between 97.85 and 98.10. That's the 98.10 area right around here. 98.06 is there. So somewhere into this or just into the bottom of that top resistance zone is where we think it's going to go, and then move down again. So we'll call for a small up week in here. Now the bond market has had this massive up move, and when you look at yields where they are right now, it's going to be harder to get the bond market to move up significantly. Here's your fib target zone. You can see it got up in there. You have a shooting star which says it's kind of topping in here. So again, we're looking for a small week. Why is it small? Well, we have upside momentum clearly. You have this rising phase right in here, which is continuing, but maybe beginning to roll over. So that means the resistance is probably up around here near 164. It could try that level again. And the support right over here in this rising 13-day moving average on the slim ribbon, which is at around 159.15. And rising. So that's kind of your range you're looking in there, and it's pretty wide, right? So we think it's going to kind of flatten out in that wide 3.5 to 5 point range, maybe right there. We would not look for big movements in here right now. The Fed is likely to act. Rates are going to stay low or get lower. And that's going to keep it from moving to the downside with this strong upside momentum. So we're just looking for a small week in here as it begins to chop around in that level. Now we'll take a look at the stock market. So we didn't exactly get the stock market correct this week at all, because that big opening downside on Monday shifted things a little bit. We've got patterns that are slightly shifted also, and that makes a difference. And we have sent these charts off to our members so that they know, the people that are level 4 members, these changes that we see going on in here when these patterns change. So here you could see we didn't quite get up to the target zone right over there, but my target was up here 30.32. I was saying it for weeks and weeks and weeks, and we got to 30.28. So that was just spectacular. Then it rolled over. Now this is key. You see where it broke underneath this level. That was the breakdown of that short-term cycle pattern, and we lost the upward momentum right there on that day. That brings this capitulation or big throwaway right there. We also have these minor cycles. Now the grayed out ones are the older ones, and the blue one was the reduced one. And now it seems like the cycle has gone back to the older ones. I said before the cycle shortened. I meant to say they've lengthened. So this lengthened out a little bit. Now is back in line with this. You can see that right there. It said that this area right over here, where it would rebound into that area, got a few points higher than I expected. And this is the sell zone. They sold it hard, but now you're getting this harami right there. The body within a body. What's a body within a body? Well, it's a baby, and harami is the Japanese word for baby. So that the harami is forming right over there. It tells you that the upside is stalling, and we're likely to get downside action. So the highest probability is there'll be a sharp sell-off sometime in the next week. Now, it could spend a few more days in here and then have a later move and lengthen it out a little bit, but really this looks to me like the area that the market should be sold for short-term traders and then move down again. The highest probability that I see here is that it will be a down week and potentially a very sharp down week at some point, and then either this rebound coming at the end of the week or the rebound coming in the middle of the following week. So this is a good an indicator right in here of the potential breakdown that we have with this momentum turning solidly negative right now. When you're in negative momentum and you get up into the area of the slim ribbon and you get overbought on the projection oscillator, the probabilities of declines are very high. Just as when you get oversold right over here on the projection oscillator with positive momentum, the probabilities of advances are very high, as you saw happen right over here, as you saw happen right over here. So positive momentum, oversold projection oscillator brings you rallies. Negative momentum, overbought projection oscillators brings you sell-offs. It's just such a high probability to me that the market will not get above this zone over here and then be moving to the downside again. So we see a down week coming for the following week, and potentially having some kind of a big, hard sell-off day sometime in that week. That's it. That's everything I have to show you. I hope that was amazing information. Write to me at askSlim.com and get the special that we have. Or ask for level 2 special if you want to check out our snapshot for index traders, $14, 14 days, and you'll get all our videos too. So I think that a great opportunity to advance your knowledge in the markets. I share my knowledge of 45 years as a trader and in the markets, trading coach, analyst, and I've got a fantastic team working on this stuff right now. Both Matt and Arvi are great. We've got interns working for us to get all this stuff out to you, plus our team that works on the website and on our membership. So we have a lot of people here, and you joining up allows us to keep bringing this information and developing more and more as we have been. So please do become an askSlim member. I want you to be so careful. We've seen what goes on these last few weeks. It is so crazy out there. And I will see you next week. Great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been